You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.
Hello investors, traders, and Market Club members everywhere. Adam Hewison here, co-founder of Market Club, reporting from a very, very cold mid-Atlantic state of Maryland. Now here's your market update for Thursday, the 30th of January. The big news, of course, is Amazon reports after the bell today. And this is a chart of Amazon. You can see our trade triangles. Longer term, we've been long from $277 on the monthly, currently trading around $400 a share. We are intermediate term trend is negative on this stock, meaning you should be on the sidelines, not going short, just be on the sidelines. We have a 75 indicating a sort of a little trend that's going up, but obviously the report this afternoon is going to be very important to see how this market goes. Now looking at another iconic stock, this is Apple, which does not look that great. You can see both our weekly and daily are both negative. The longer term is long from 465. We're currently trading around $500 a share. Very oversold, you can see right here, but nonetheless this market is actually lower, of course, for the month, and that's not necessarily a good sign. We talked about the bearish engulfing line on some of the weeklies and monthlies, so you really pay attention to this. I'm really surprised, as a lot of people are, and certainly I'm sure Carl Ichan is very surprised. He's got a lot of stock in this company, and $3.5 billion worth, I believe, and he's trying to chalk it up, but the market's going down. That's something to really pay attention to. Here's a chart of the Dow, and the Dow's minus 60, indicating a trading range. You can see we basically came out of this several days ago, and it's still lower than when we got out, and that's the key point right now. We're not bullish on this. The market's down about 3% for the month, and that's an important element. But certainly the support coming into this market right around these levels, and I think that's an important element to watch right now. It's just around these levels here. You can see some sort of support coming into the market. So let's just see how that plays out. This is looking at the S&P 500. Again, pretty much the same picture there. You've come back down to a support area, which is right around here. In fact, you can use our other line here, our trend line, and just do it like here. And you can see it pretty much on the money. We may pop up a little bit, but generally speaking, I would rather be out of these markets right now, given the fact that we have a weekly trade triangle that's saying negative, and you can see that came in some time ago. So let's move on to the NASDAQ. NASDAQ recently got a signal, only that's 3-4 days ago, on this indices. I think the best thing there, again, is a minus 60. It's a trading range, so you may get a little more of a pop-up here, but generally speaking, I think the market's looking a little bit tired. We've got some negative divergences right here. You can see where the market's been making new highs, but you haven't been doing that with, you've been making new highs here like this, and the divergences are going that way. Not a good sign. Plus you're below the 50 area, which is also a negative for this particular index. So this is the euro against the dollar. The dollar's been very, very strong. You can see the move on the weekly, which is what we use, the weekly and the daily for timing. So I'm going to put the dailies in here. Boom, you can see right there. There was a buy right there on the daily at 135.77. Now this is a cover short position from here, from 136.32. So that would have made about 60 pips. You get out of the market, you get back in here at 136.59, and it's 135.53. So you're making about one full handle right there. So again, we're below the 50 line. It looks a little bit negative for the euro right now against the US dollar. So again, these we use the daily for timing and the weekly for the trend. That's what you want to look at. So you don't look at the monthlies, just look at these dailies, and you can see the last weekly it kicked in here, 136.25 right here. Once that kicked in, we wanted to trade this market from the short side, meaning short euros, long dollars. Moving on to crude oil. Crude oil moved up to a new weekly high today, 97.84. It's 98.28 right now. Again, it's really acting very, very well, but this is going to be a real area of resistance right around the area right here, I think. This is going to, around the 100 level, is going to be a real problem, I think, for this particular market to get through. So we'll watch that very carefully next week, but generally speaking, the intermediate term trend and the daily are both long, which is what we use for trending and trading the crude oil market. This is spot gold. This has had a big down move today, sort of surprised a lot of people. A couple of things to look at in my opinion here is, one, you are right back to the what we consider to be the support zone. You can see it's hit here 3 times, once here, and again here. Every time we've gotten down there, it's popped back up, and I think there'll be no exception this time either. here. So again, you're in a trend that's going higher based on our trade triangles, and that's our weekly. The daily, however, is negative, indicating you should be out of this market, and that came in a couple of days ago at $1,252, and it's about $8 ago, so not a big deal. Generally speaking, the market is still higher for the month, which is still what's important. You're up about 3% in gold for the month, while the equity markets are down about 3% in some of the indices. Anyway, this is Adam Hewison. If you haven't used our Q&A section, I highly recommend you get in there and ask questions about these markets or other markets you're following. Thanks for watching.